I guess CPI is one of the most important thing of the day. Yesterday we traded CPI. Who was there on the live stream?
It was PPI. With the
PPI, yeah, not CPI.
I was there.
I was there, Thomas.
Good, good. What was the conclusion, or what was the summary? How would you summarize PPI yesterday?
Well, I mean, the numbers look like they were a little bit inflationary, but gold still wanted to rally. And I think that just, and I think it goes to one of those comments where you said when the Fed keeps saying we'll raise the interest rate, we'll be cautious, and after 10 months or 12 months, people just, go different direction altogether.
They become resilient against,
Correct.
bullshit talk. Yes, Akshay perfectly summarized it. That yesterday, PPI data was not just inflationary; it was fucking inflationary. -1 +5, so it's a 0.6 deviation from the previous one. Slight deviation from the forecast. So most of the forecasts were, yes, inflationary, but the actual numbers beat expectations. So what's important to understand here is obviously PPI is a similar inflation indicator as CPI, but it measures the change of prices of goods and services from a producer perspective, whereas today CPI is going to measure the change of goods, the change in prices of goods and services from a consumer perspective. So one of them is a leading, whereas the other one is a lagging indicator. Yesterday was a very important lesson, and Akshay perfectly captured the importance here is that if you understand market sentiment, then it will become easier to trade, because sometimes market sentiment goes against common sense and textbook economics. Perfect example yesterday. In theory, when data is inflationary at a high interest rate environment, during the hiking cycle, if CPI would come higher than expected, then gold would push down, and vice versa. Significantly lower CPI would push gold higher. Same applies for PPI. So a higher PPI, in theory, would have pushed down gold, but not yesterday. A higher PPI yesterday came out, and yet we managed to catch 200 pips. The reason why is because the market sentiment is shifting. Perfect example for this is this chart, which I always send out before every CPI. This chart represents, quite a few CPIs I traded. Not all of them, but 3 years of data should be sufficient. So every single data that you look at is the CPI release. And for 3 years, there was only 4 occasions when gold didn't react the textbook way to CPI. For 4 years, 99% of the time, if there was a higher reading, and remember the last 3 years, there was a hiking cycle with high inflation, COVID, so there was monetary tightening cycle. Every single time when there was a higher than expected inflation reading, so higher than expected CPI, gold sold off. Every single time when there was a lower inflation reading, gold went up. Doesn't matter how many you look through on this chart, you're going to see exactly the same thing as I just said. Sometimes, of course, we have core CPI and headline CPI mixed, which confuses things, and there is volatility, goes up and down, so it's a bit difficult. But generally speaking, if CPI is higher, gold down, CPI is lower, gold up. That was the case for 3 years, but not the last 3 times, because the market sentiment is changing. So if you look at the chart, headline CPI higher than expected, gold was going up. Headline CPI was higher than expected, gold was going up. February headline CPI, well, lower than expected, gold was going up, but core wasn't changed. So if you look at the last 2 or 3, you're going to see. Of course, many people, including myself, we can add geopolitical tensions, war, many other things, which happens in 7th of October. But we have to put our economist hat on and exclude everything else, omit all the other variables, and focus on CPI, because today is CPI and not war day. Generally speaking, ceteris paribus, you omit all the other variables. If you really want, you can add in, but generally focusing on the CPI, we're just going to talk about CPI. So, yes, geopolitical tensions did contribute to this massive rally, but we're focusing on CPI. And you can see that back in March, this nice spike was purely because of CPI and not, maybe there was geopolitical news, but this was CPI. And that spike was, 750 pips. Absolutely crazy. So today, the forecast by textbook economics. If we have a significantly lower CPI, gold is going to push higher, or should push higher. But if we have a significantly higher CPI, gold will revisit last week's opening price at 23.30, which is about 250 pips away. Now, because the market sentiment is changing, and I showed you with real data, with proof, the market sentiment is changing. Yesterday's data release on PPI was a perfect real-life example, and I still have those positions running. Let's have a quick look. I still have those positions running. Yeah, 194 pips. Absolutely crazy. So because the market sentiment is changing, we need to factor in something else. How significant is going to be the data difference or the deviation? If it's significantly lower, gold goes up. If it's just little higher, like yesterday, there was, some of the data was just tiny bit higher, some of them were significantly. I think gold is still going to push higher. Why is that? The reason why is because I actually mentioned for the last 10 months, Jay Powell is saying the same thing. Federal Reserve is saying the same thing, more or less. But generally speaking, the market participants and the market in general is comfortable with higher rates for longer. The market participants are comfortable with a inflation between 3 to 4%. So everything is pointing into the direction that gold is poised to go higher today. But of course, it will depend on all the data. What I see from the technical perspective is that in the higher time frame, we have a beautiful bullish flag pattern, beautiful upward momentum, beautiful market structure. And what I see is that we have a junction here, which is very important. Bull flag, top trend line, and also we have the bullish market structure, higher highs and higher lows. Conveniently, the pivots are just below this junction, which is good for us. There could be a slight pullback. So let me show you my bias or my speculation today. I think there could be, price may go up a little bit higher. And when the CPI comes out, I'm expecting a little bit higher CPI. And that is going to push down gold. Same as with PPI yesterday. So people or the market participants are going to sell the news, but then they're going to buy the fact that, the Fed won't raise interest rate. And the speculation is hard, that everyone is speculating that the Fed they have to cut interest rate sooner or later. They're not going to raise interest rate. So this is my speculation for today. Any questions?
No. Thank you.
Very good. Okay. Of course, it will be data dependent as always, but this is what I'm expecting. Do I enter into a new position now? Absolutely fucking not. Most amount of time, as discussed yesterday, Adrian, are losing on London Open, especially on CPI day. So just going to enjoy the profits, and that's it. Do you want a light trade for CPI today?
I don't understand the question.
Yes.
Of course.
Yeah.
It will be nice.
We are going to make so much money.
Yeah.
Legend,
We get
bro,
all the
legend.
punanis. We're going to Dubai.
Come.
We're going to fuck this shit up.
Yes. In the night
Yes. Yeah. Well, I don't want to. Yeah, full margin, no stop loss.
Oh,
Stop loss is only stop loss is weapon of the week, as I call.
bro, when you do no stop loss in Dubai, you are broke as fuck in 2 days.
I,
Yes,
yeah,
it's
absolutely.
crazy. The city is crazy.
I can imagine the prices and everything, but yeah, maybe a couple of drinks and we'll buy that airplane ticket.
The normal life of a forex trader, Thomas. You know.
So this is the analysis. I could talk about hours what goes into the CPI. Two of the most important items in the CPI which people are going to watch is shelter and gas. Now, the reason why they're watching, because the last time 50% of the inflation increase, you can see from 3.2 it increased to 3.5. Now 50% of this 0.3% increase was contributed by two items in the basket of goods: shelter and gasoline. Now gasoline dropped from $85 to $77 or something, but shelter is expected to continue to rise. So whatever is going to be, just read the chart. This is the most important part you need to understand. I will be there to live trade it. No front running positions yet. And that's the full analysis. If you have any questions, feel free to ask at the live session. We're going to meet up around 2 p.m. Central European time and make some money. Thank you so much, guys.
Thanks, Thomas. Have a nice day.